Good day, everyone. Well, we see the market today trying to stage a bounce. The S&P 500 and the Dow have both recovered their respective 50-day moving averages. In the meantime, we do have ample distribution days over the last several days. We have a traditional market pullback in the sense that it tends to come without warning and then happens over a period of a few to several days where the major averages tend to sell off in the neighborhood of 5%. Then they bounce equally as hard to the upside. And so this has been the rhythm of the market as of December. And it makes for very choppy trading, a very volatile environment that, again, as we've emphasized, one has to be quick. One has to be nimble about taking the profits when they do have them. We've had a number of actionable names hit the markets, but a lot of these names will have headwinds, especially when the markets are either tiptoeing higher or you got the headwinds of a market that is in a mini correction. We did get a put-to-call ratio that spiked the other day, but as we emphasized, the put-call is a secondary indicator at best. It can be used to get a rough approximation of a market that might be finding its floor, but as we pointed out, this floor may not come for another few percent. And that's happened a number of times, actually. I mean, I'm kind of surprised that some publications out there talk about the put call as if it's something that is more reliable than it really is, wherein they will actually cite that the put call has called market bottoms several times over the last year. Well, they need to be really careful about that, because if people start buying or figuring that they are safe to buy after the put call spikes, then they're in for a rough ride, because several times that the put call had spiked above 1, the markets continued to plummet by another few percent. And if you're dealing with high-octane stocks with relative strengths above 95 that are showing great leadership characteristics, those are the exact stocks that get taken down, not just a few percent, but usually several percent or more, before the market finally does find its floor. So again, these secondary indicators in context, used in context, can be useful, but I think it's very much misinformation for anyone to put too much stock in any one indicator. It always has to be used in context, and the stocks themselves give you an indication, as we emphasized, on the internal health of the market. Other than that, we've got commodities that are still in an overall downtrend. We've got oil, which has tried to find a floor. You could say the same thing about the Commodity Research Bureau, which is a basket of commodities, trying to find its floor. But there's still no clear evidence that this downtrend has come to an end here. And you see gold hitting new lows, new multi-year lows there. Same with silver. The U.S. dollar, meanwhile, is on a tear to the upside because the U.S. is the tallest standing midget. So with the indications that the economy is on the mend, money flows to the dollar, that bids it higher, plus the Fed indicates that the stronger the economic indications, the sooner they're going to start raising rates. So that, too, is, of course, good for the dollar. And it's not good for the markets, which is why it's probably the main catalyst behind the current sell-off, is the worry that the Fed is going to end up raising rates sooner than expected. But Yellen, the Fed chairperson, is a dub, and so I think they're going to need ample evidence that they can start raising rates, meaning it's probably going to be quite a bit longer before the Fed actually does take that first step. So the markets right now are in fear mode, in risk-off mode, but ultimately I wouldn't be surprised to see yet another resumption of this very, very long uptrend that started in March of 2009, marking the 6th year of this QE-motivated bull market. Gil?
Yeah, it's like a shell game, but I think, on Tuesday I was tweeting that things are getting a little bit oversold and the ugly duckling might be lurking. And then yesterday we had a slight up opening, which struck me as very weak. after the market getting hammered so badly on Tuesday, and now finally today you get a jack to the upside. That's this typical fast and furious QE type of rally off the lows, but basically what's going on objectively is, if you look at this, it's a pretty sharp break off the peak here, and so you're rallying back into the 50-day on the S&P. So it's logical, I think, in terms of the position and also how obvious the sell-off got after several days. You can see the S&P drop back into this prior range, whereas the Nasdaq is holding above its prior breakout and the 50-day moving average. Now, my suspicion is we may eventually see it test the 50-day, but I think that's really unclear. I think the bottom line is that any shorting activity is primarily tactical, and I covered most of my shorts on Tuesday. Yesterday we had the little rally, put some out in stocks like Data, for example, and that thing reversed and closed near the lows of the day. But you know, you get a couple of bucks out of it. LinkedIn is another one that I thought was shortable yesterday. Today somebody came out, and look at it today. Yesterday somebody came out with a buy recommendation, or today they came out with a buy recommendation at $300 price target. Stock's trading here, and you can see that it's been stalling. Let me blow this up. It's been stalling on these attempts to move above the 10-day line. You can see here's a breakout attempt from a short flag, and I think it was kind of a 3WT or 3 weeks tight sort of formation trying to come out, and it failed. And you had this Bible gap up over a month ago, and I'm beginning to wonder whether this thing is just running out of gas and just doesn't have the impetus to go higher. It almost looks like a short to me, using either the high today or high yesterday, which I think was, what, 268.79, as a real quick stop if you're bold enough to test that out. I think the question today is whether you're looking at, I mean, this is what the rally looks like on a chart. So it's really nothing. It looks like a lot, and same thing with the S&P. So I don't think it's anything to get carried away with in terms of wanting to go buy something, because it is a shell game. You know, if you catch the right name on the right day, you might make a couple of bucks. If you catch the wrong name on the wrong day, and let me use an example like this. Here's a right name on the right day, and then 2 days later the wrong name on the wrong day, and you're getting hammered here on Acadia, which was looking good a couple days ago. And to me, that seems to typify the risk that's in this market. So, for example, you even look at a stock like Cyber, which had a big move, and of course, you know, that kind of move you sell into. You get a Bible gap up, and you get a big jack from there of about, I don't know, what, 30% even just from here? Is that right? Yeah, if you figure from 55 up to 70, more than that. Are my numbers right there, Dr. K? Yeah, they are, aren't they?
About 30%.
Yeah, and so now they did their secondary offering, 4 million shares. They priced at 51. Stock gets clipped on that news, and now it's undercut the lows of the Bible gap up. But again, big move, and then they just kind of blow it. And I think what that just speaks to is the need to take profits when you have something that's moving sharply to the upside. And the bottom line is there aren't very many of these. If you got some Cyber, that's great. You know, I played it, but the problem with Cyber is it was not marginable for me. So a 50% position in that, and then say a 50% position in Intrexon, which isn't marginable either, uses up all my buying power. And there's not enough juice in that to play that upside as well as I would like to. And so that's a little bit frustrating. And we see the market coming in now. The Dow's up 184. You notice the Dow's up 1%, S&P's up almost 1%, Nasdaq's up 0.49. Interesting thing I noticed is that the Nasdaq 100, which is the big cap index, it came all the way down on top of its prior range. And that had been one of the driving factors behind the Nasdaq's move to new highs a couple weeks ago. And so you came all the way down here near the 50-day, right on top of this structure. And so this also makes it logical that you would see a bounce here. And so, you know, what you're seeing today doesn't surprise me. I was thinking, though, we might head lower today simply because yesterday was so weak. But as is so often the case in this market, it's a shell game. And sometimes you pull up the shell that has the magic number underneath it, and you get a big rally on the day. But it all strikes me as BS for the most part, and so I'm not a buyer here today. And I'm actually looking at it more as a short. And some of the things I'm looking at as shorts, let's see, how about if we go, you guys want to go through my short sale watch list? How about some votes out there? I want to see if anybody's awake. Sure, yes, yes. Okay, that's enough votes. 5, 6, 7, 8, 9, 10, 11, 12. Okay, yeah, that's good. All right, here we go. First, and let's see, I'm just going to go with the things that are up. So I'm watching, what I'll do is I'll go through my short sale list and start with the stocks that are rallying. So we see Splunk today is rallying. Volume's not particularly heavy, but the rally is logical. Remember, this was a short up here, and we talked about it up there as a short on the, you got the big cup with handle, sloppy cup with handle reversal here on the weekly chart on heavy volume. And you come all the way down to the 50-day moving average. That's the blue line. I made it nice and thick for those of you who've asked, those of you with bad eyesight like me. But the bounce here is logical. So I'd be watching this coming into the 20-day, the 10-day confluence at 63. I think 20 days at 63.27. The 10 days at 63.65. So that confluence is potentially a short sale zone. The next one is data, which is actually on my short sale watch list primarily because you've got another one of these big, ugly cup with handle type patterns, kind of a pod-like formation, but remember, it doesn't have this steep, straight down, straight up, but it is pod-like in the sense that it is a big, ugly late-stage formation, failed at the 100 level, and we talked about this in here, that this could be shorted on the basis of Jesse Livermore's century mark rule in reverse, which he used to short Anaconda Copper back in, I don't know, I think it was 1907. I can never remember the exact date, but I think it was 1906, 07, when he shorted it on the basis of it failing at the $300 level. Did you say something, Dr. K?
Yeah, I think it was 1907, but it's been a while.
Yeah, it has been a while. It's been like 108 years. Anyways, let's see here. I'm just looking, no questions. Okay, a lot of votes for going through this. Anyways, you can see, so you undercut this low, and you bounce probably off the 10-week line. Okay, so that's logical. And technically, this has not really failed yet. But I'm watching here. Yesterday, it was a short up here. It came in, covered it for a day trade. Now we're back up into this 94.95 zone. So I've got a little bit out here. We'll see how it plays out. I don't think we're getting much juice on this yet on the... No, this is what it looks like on the 620. So you're kind of waiting here. The way I look at this is you got a little bit of a MACD stretch here. If you guys can see this, let's make this real big so you get some sense of how I'm interpreting this in real time. Let's see. Here we go. So you can see here the MACD lines are pretty high here. It almost looks like a MACD stretch, but that's pre-open. Here's where you open up. So you get the MACD stretch here. Now you're getting the cross up here. So my guess is you might see it start to roll over from here. At the very least, you can use the high of the day as a quick stop. That's how I'm approaching it. Another one I'm watching here is Facebook, which looks kind of pukey to me. If you look at this, trying to break out of this cup and handle type formation, reverses here on heavy volume. And then you just break to the downside for 3 straight days. And to me, that just looks very weak and kind of pathetic. I mean, I would think that if Facebook's going to come out of this long base, it's going to do it with some authority. But it did come down to the 50-day, so now the bounce off the 50-day is logical. Now you're coming into this area of overhead supply. You see that? And it coincides with the 20-day moving average. So if we go back to the 620 chart, what you see now is it's starting to break on the cross, but you got the MACD stretch early pre-open when it was already up, and now you haven't had an associated move on the MACD to newer highs intraday. So to me, that's a little weak, so I put it out here as a short. And it's in a little bit, a couple of, few pennies here, and we'll see how that pans out. But you can see it's starting to drop below the 20-period line, and we've already got a cross here, so looking for a cross in here. So I think for some reason these lines are backwards. This blue one should be orange, and the orange one should be blue. I'll have to fix that later. But in any case, you can see what I'm talking about. So that's one I'm looking at as a short here. Let's go. Amazon is, I'm wondering if this is starting to break down. You notice how it's really kind of a big ugly formation as well, and we rally back up towards the highs. You could just see this as a massive shoulder, or maybe even a head in a secondary head and shoulders formation in the making. I don't know. I'm speculating about this and trying to decide what it might turn out to be. Not like I know for sure, but you can speculate and try to figure out where it might go from here based on trying to extrapolate the pattern out from here. So what you've got going on today, you've broken the 10-day finally. It held it for a good period of time after this gap up and just kind of slowly trucked higher. And then it's broken down the 10-day now through the 20-day. Volume is not particularly heavy, and you're rallying back into the 20-day. So I think a failure here at the 20-day might be a sign that things aren't so copacetic with the stock. So here's what it looks like on the 620, possibly on the verge of a breakdown. And I think you have to watch this. You have to watch and see how this pans out. Green Mountain is another one I'm keeping an eye on here. You're kind of in this big, ugly sort of head and shoulders formation, rallying up into the 200-day, I guess just past the 50 to the 10-week here on the weekly chart. But notice how you have a black cross here. And coming up today, I think shorting this probably I'd prefer close to the 200-day moving average, but jury's still kind of out on this one. On the 620 today, let me link this actually. That'll help. Whoops. You can see that it's starting to roll, okay, right now in real time. Here's another one, Iron Mountain. This one's moving up today. It's kind of out of position, but if you look at this on a weekly chart, it's had a pretty good move. You see a head and shoulders forming. You might have a right shoulder here. It's very weak, but bouncing off the 40-week line, off the 200-day line here, so up into the 10-day line, that might make it shortable. Up here, this is a smaller semiconductor, but I don't really, it's pretty weak, and I think this thing probably, it may bounce around for a little bit, but my guess is this thing's eventually going to roll back. It's just a question of how far it rallies. It might get up to the 20-day moving average, so something to keep an eye on. Market's still up. Things are still kind of rallying a little bit. I'll get to some of the things that you might look at on the long side. Yahoo is another one I'm watching. Notice that's in a bear flag. The rally's up into the top. Might be shortable. Here, the 620 is just starting to cross. Gilead's another one because you're in a kind of a, this is sort of a rolling kind of head and shoulders. You see that? And it looks pretty weak because there's a lot of red in the pattern and a lot of red volume in the pattern. So now you've rolled through the 50-day. You haven't violated it here, but you're bouncing off the 200-day. So rally up into the 50-day at 101.51 might be a spot to short the stock. That's not baked or written in stone that's going to break from here, but it is looking weak, and so if the general market weakens, that's sort of something you might want to keep an eye on. CMG.
It's had two gap downs. One of the gap downs was on the most recent earnings report, and today's volume is 30% under the norm. And you would think that on a bounce, especially on a day when the market's bouncing, you would get more volume than the average. But we're at right now 36% under the average. So I think these are nice clues.
Yeah, and you can see on the 620 it's getting close to a cross, but it's still a fluid situation. I think the general market is trying to rally. How far it goes is anybody's guess, but I think you have to wait and see if it starts to break down. And then some of these you might come after. You might even try shorting them into this rally today if they're set up properly and you have a tight stop in mind. So let's see. Let me continue through my short list here. CMG I was going to. Now CMG, you can see a fractal head and shoulders type formation here, and that is coming on the heels of this late stage failed breakout right here. So you tried to break out of this base and it failed here on huge volume. Now it's going sideways on what is arguably a bear flag, but it also looks like a fractal head and shoulders after the breakdown here. So you can see how this is a combination of two patterns, and you can interpret it using either pattern. So in this case, you can see the rally up into the 20-day may be a shortable situation. So you might look at that as it rallies up into the 20-day moving average. Let's see what the volume is. What's the volume rate on that? Yeah, you're running minus 71% above or below average right now. So that's definitely a wedging rally into the 200-day. That's definitely on my watch list. And you can see on the 620 chart, it hasn't really broken down. Let's continue. Amgen's another one that looks kind of doggy. Not unlike, I guess in the sense Gilead is in this longer head and shoulders, just a little bit of a head and shoulders formation. You failed here, you reverse at the 10-week line on higher weekly volume. Now you got a feeble rally up here on what looks like a little bear flag that's forming on the daily chart. And you can see on the 620 it's already failed. Okay, so you can see some of these are already starting to roll over. Here's Seagate. That thing's already blown apart. This one, I'm just going through some of these real quickly. Now here's Gap Stores. Now if you see this is sort of like rolling pattern here. Remind you of a stock, Lululemon, a while ago, if you guys recall, way back when. It topped after this kind of choppy, long topping formation with a couple of, it had a big head and shoulders here. So now Gap Stores is starting to show this sort of formation. You can definitely see the fractal head and shoulders in here, and that also shows up here on the weekly. So there's some similarities I noticed to Lulu before it topped, and so you got this rally coming up into the 200-day moving average here on weak volume. That looks suspect to me. So that's another one that looks like a short. You can see on the 620 it's kind of flopping around the 20-period line, the blue line here, and not really breaking down. But that's, you see, I'm seeing a lot of patterns like this. CommScope is one that's kind of up there, had a big breakout. I'm just kind of watching. It's a kind of a crappy stock, I think. Broke the 10-day. Now it's wedging up into the 20-day. I'm thinking it's headed for the 50-day. It's a little bit thinner stock. I think it trades, what, 1.7 million a day. That's not bad, but it's not huge either. So anyways, Workday, trying to rally to the 50-day, but notice it's reversing, and right now it's near the lows of the day and below where it opened on the gap up this morning. And we already talked about this one and put this out as a short up in here on the rally up in the 20-day and 10-day zone up here, and it broke down through the 50-day. If we look at it, this is very similar to Splunk, the general pattern. And we can see that here. See that? There's Splunk. Here's Workday. And you're blowing chunks here on the big reversal off the peak on heavy volume. It can't seem to get above its 50-day. I think this, if you're shorted up here, I think the 50-day is your trailing stop, and I think the downside price objective is a 76.36 low here, and that's a decent profit if you short it up in here. And I probably should have put some of that one out this morning. But it's reversing, and you can see on the 620 it broke early in the day, less than half an hour after the close. Baidu is another doggy one, reverse at the 50-day here, and you can see this is kind of in a big rolling sort of head and shoulders-y looking formation that doesn't look so hot. And we have a 620 sell on Baidu earlier today, just like Workday, I think, yeah. Within a half hour before the or after the close, or after the open rather, and it's breaking to the downside. I think the short point was here. I actually shorted this up here, got a little bit of downside, and then I covered it like an idiot, and it's continued lower. So, but you can see that's one to keep an eye on because it looks like it's starting to break down through the neckline, and I guess any rally into the 10-day at 208.11. Up to the 20-day up at 209.49 might be shortable. So it really all depends on how far this market goes from here. You got a shootout there at the OK Corral, Dr. K. Baba.
Something like that.
Baba is bye-bye, I guess, going lower, and after the gap down, it just continued to truck lower. Nowhere to short it. Here's one. Take Two looks like a doggy to me. This is probably a big head, and it's going through the 200-day. Looks like garbage, but I don't see a shortable point in it. F5 I thought was a short on a shortable gap down here. This is kind of a classic head and shoulders. You see that? There's the top of the shoulder right there. You get the black cross with the 10-week coming below the 40-week. and stock reversing today after an up open, gapped up in the morning, and it's now reversed. And you can see that on the 620 here, kind of rolling around. I think this thing's going to go lower, so I'm guessing at least to this low here, which is 108.60. And Qualcomm is another one. I shorted this one up here on this day, covered it down here on the 50, and it just keeps going. They do that just to piss you off, just so you know. But you really can't complain about catching a couple, $3 on the downside here, because it's a good tactical trade. And I think a lot of the short selling right now is tactical in the sense that it's more short term of a few days to maybe a couple of weeks max, where you're campaigning something. Because you don't know if the general market, this is the first break off the peak. So once you have the first break off the peak, you have to wait and see what happens after that and whether you get some sort of a weak rally to short into. Now, you can see the Nasdaq, well, let's go back to the Nasdaq actually. Here you go. It's still well above the 50-day here and the top of the prior range. So, there's room for this to come down. The context for today's rally, I think, it comes from the S&P up into the 50-day moving average. And if that fails, then all hell might break loose. I don't know. We'll see. We'll see what happens from here. Let's see. Last but not least, Tesla. All of a sudden now, I can't get a borrow on Tesla, which makes me think maybe the whole world's shorted. But you can see this thing, it's in a rolling kind of head and shoulders formation. You had 1, 2, 3 waves down and then a rally, and it's not going anywhere. And now you're along these lows. It's questionable whether it's going to hold. I think it eventually goes through, and I think Tesla eventually goes a lot lower, but that's going to take some time, I think, to work itself out. You've got some support along these lows, but it may not hold. In the meantime, I'd be using any kind of rally up into the 10-day at 196.47 or the 20-day better at 200.23, or even the 50-day if that were to occur. So, to me it looks cheesy and potentially failure prone. And, the bottom line is it's just an auto company. It's an auto manufacturer. Right, Dr. K? Am I missing something here? Is there more to it? Is this the futuristic spaceborne auto company of the future, or what's the deal here?
Well, these fundamentals tell two stories. On the one hand, he's at the right place at the right time, and the press loves it, investors love it. The perception then sends the stock into the stratosphere for a while, but then reality catches up, and I think there's a lot of headwinds that this company's facing now in terms of the fuel pump stations, getting enough of these so that there's critical mass, the practicality of the car for the average, for the everyday driver. These are big headwinds, and so what we might see is a further correction in the price, presuming that these issues can't be resolved near term, and these are big issues. These are going to take a number of years to resolve. So we might very well see Tesla trace out a very, very large cup, but then you're going to also have competition come into the fray. So this might be the ultimate major top for the company as a result. It doesn't mean the company's going to go bankrupt, but it just does mean that it may not see this kind of big gains that we saw the company have in 2013.
Yeah, I mean, my view is it's just a car company, and even if they come out with the new, what is it, the Model, 3 or whatever it's called, the smaller one, big deal. What differentiates that from any other electric car out there? And okay, so if they do sell a lot of them, do they end up selling more than, say, Ford or Toyota or anybody else, to the extent that they deserve to be valued at 193? That's 193 times forward estimates on the stock, when your average auto stock, even the good ones like Ford, let's take a look at Ford here. I'm going to check that real quick. Ford is probably one of the better auto companies, right? It sells at 10 times estimates.
That's going to be a typical auto stock, GM and whatnot.
Yeah, so
I think Tesla come back down to earth because really the problem is the competition for Tesla. All these companies are jumping on the bandwagon. So, and it's not like eBay. You could argue eBay and Amazon, well, they had first mover advantage in the internet space, and that network effect is incredibly important in the internet. That's why eBay and Amazon are still top dogs in their space. That's why arguably, Bitcoin and cryptocurrencies could maintain that that vanguard position. But when it comes to automobiles, there is no network effect. I mean, you've got Tesla, but you've got Ford, Honda, Toyota, Nissan. You've got all these companies that are going to be competitors. So, forget about the network effect and forget about the barrier to entry. Tesla doesn't have it on any of those fronts. And so, I mean, that's just a very compelling argument that Tesla right now, where it's trading, has a lot lower to go.
Yeah, I mean, that's how I look at it. So it's just a matter of time before it blows the this support level, which is down, I guess, what did we hit the other day? A low of 187.60. Over here is 185. I think it's just a matter of time. And so one thing to think about possibly are long-term puts on this on the stock. Anyways, let's get to some questions. Cyber is at the upper end of its range. It looks to me like it might be at the lower end of its range. Are you talking about coming down? I mean, we already talked about this. It's undercut this low, which is 52.30. You're trading at 52.20 at a heavy volume. I think it's got to take some time to absorb the additional 4 million shares. It's a relatively thin stock. Trades 1.7 million, and it grew up from like 600, 700. So I don't know if this is a buy point, but that's all going to depend on what the market does from here. And I think it needs some time to settle down and absorb the 4 million shares. You got any thoughts on that, Dr. K?
Yeah, this, I mean, it had the gap up. Now it's undercut it by, well, it looks like, you could argue that it still hasn't hit the porosity level. But actually, when it does a round trip like that, you sell it before it gets to that point. And this company has a compelling story behind it, but right now, you're just better off waiting and seeing if it can really base out and form a constructive buy point before taking any action with this stock on the upside.
Yeah, I mean, things had a pretty wild move to the upside, so it's entitled perhaps to build a base. You're down 3 weeks. It may bounce out off the 10-week line, especially if the market corrects any further. So, right now that's an open question. And I think the 10-day might come down in here, and then it might move sideways, hold above the 50-day, and maybe there's a pocket pivot. So I think at this point you're just kind of waiting and watching to see if anything constructive develops here in the coming days, weeks, or months. So Twitter is a stock I consider a short on this rally. I mean, I shorted up in here, and I've been playing this move. You undercut yesterday, which looked like a good cover point short term, and now you got a rally this morning on some third party, I don't know if it was an analyst or some other firm, saying that their ad sales are doing really well and it's a must advertise spot or whatever for retail. I don't know. So to me, this thing is weak. And today you're up on, you got some hot news. You're up on minus 43% below average volume. So that's a voodoo dry up on the rally into the 10-day. That's a short point. So I'm actually short this turkey. Hit a high of 47.32. I think that's your stop. If you want to put it out here, you can also check it on ye old. The 620 chart's kind of flopping around, so you may want to watch for it to roll over again. But I don't know. I think this is all potentially trouble because it reminds me a little bit of LinkedIn in the sense that it tried to break out here, but it reversed. And notice how every time it's tried to go above the 10-day, it's reversed and closed near the lows. Finally, we break through the 20-day on heavier volume here. If you can see that. Let me see, I'll make it real big. See that heavier volume here? And now you're wedging up into the 10-day. To me, that's almost too classic. And at the very least, I think if you're short of here, what do you got, 30 cents of upside to cover into if you get stopped out? And, maybe the market does continue to jack to the upside, but to me, it's all just a shell game at this point. Let's see some other names. Apple. Well, Apple bounced off the 10-week line today. Got close. I think it's still going lower. I thought it was a short. Anybody who follows me on Twitter, I actually shorted up around here on the 129 level. I thought it was a cover this morning, and so put that one in the bag and hang out and see where it goes from here. But it might be a short, longer term. I don't know. Everybody thinks this is a sure thing, and they came out with the Apple Watch, which I don't know. It doesn't really thrill me. It looks kind of small. I'm actually waiting for the Apple cufflinks, the iCufflinks, because I want something smaller. I also want 2 of them so I can have my music in stereo. How about you, Dr. K? Are you in for that?
Yeah, let's do that. That sounds good to me.
Yeah, I'm waiting for the iCufflinks, or even better, the iCondom when that occurs. I don't know. Yeah, the iWatch, I saw it. I can see how technophiles and Apple freaks might be into it, but I don't really see it too much as being of practical use, I suppose. Pretty expensive watch. I don't wear watches myself. They're I don't really like the way they feel. I don't even wear my wedding ring just because you have to wear it on your left hand, and I'm left-handed, and it just makes my hand feel heavy and weird. So I'm not into wearing jewelry myself. Someone else might be into it, but I don't really get it. To me, the iWatch or the Apple or whatever they call it, it's like Apple's created a parody of itself with that product. So, but I don't know. Maybe it's the future. I didn't really care much for the iPad when it came out. Now I have 2 of them, so what do I know? But I think short term, the stock isn't showing a lot of strength, given that it's a sure thing, and that in and of itself might be a problem. Because remember, the last sure thing in the market over the last few months was BABA, when it was cruising out here and everybody had to own it. It's going to 200. The guys on CNBC are babbling about how it's going to 200 and it's a must-own stock, and that's what you hear about Apple. And sometimes you have to wonder whether that's trouble. CY, I actually like CY. They bought Spansion, and you had some pocket pivots. It's just a slow semi. But I'm not really going to buy it. I actually liked Code better, but Code is, that looks exactly like Cypress, because they're going to be bought out by Cypress, or they're being bought out by Cypress. Let's see, Shake Shack. We talked about this last week, but it's still kind of erratic. Look at this big reversal. I guess that's a pocket pivot. Is that a pocket pivot you want to buy, Dr. K? Are you all over that?
That's a pretty wild ride it's had today. There's no earnings on the table. Well, at least last quarter was down, negative earnings. So earnings are pretty light. This is a very thin name. Group strength is good, but it's an IPO that's thin with very very little in the way of earnings. So you have a lot of risk, and it's just not worth playing.
Yeah, I don't know. If you got, again, it's like the shell game. If you bought it this morning on the pullback, you're getting lucky. So sell it and take your profit. Here's one for you, Dr. K. You can address this. For those who want a Tesla story, it is the Gigafactory and power storage. You have any thoughts on that?
Oh, what is he talking about? He's talking about the Gigafactory.
They're building the big Gigafactory in Las Vegas, or not in Las Vegas, in Nevada. I always think of it, is it the state of Las Vegas or the state of Nevada? I guess it's Nevada, but yeah, I mean, the thing's they're going into huge debt for that. And battery technology, to me, I'll just throw in my 2 cents, is constantly changing and subject to a lot of technological innovation, and so things could change a lot. And so I don't really see it as something that's a great story for Tesla. How many batteries are they going to sell, and how does that figure into the long-term earnings and sales? Your thoughts there, Dr. K?
The battery technology has really been slow, the progression of it. And you just look at your cell phones. Look at how look at your laptops. All these batteries that exist. There's been no major quantum jump in battery technology. Now, I mean, I don't know what their press release said. Maybe they're touting that they've had some kind of quantum jump. But I'd like to see proof in terms of the specs, because there is no battery yet. There's supposed to be this technology that's just coming together that will be the real quantum jump that will allow a cell phone to go for a month without charging, or a laptop to go for a month. I mean, this is major revolutionary stuff. But it's been talked about, and there's been no proof yet that it exists. This has been at a research level, a laboratory level. But it will come. I mean, I'm a big technophile, and I know that these things will occur at some point. The question is, will it be within the next 5 years, or do you have to wait quite a bit longer? Because, like I said, battery technology tends to evolve at a very snail's pace. And so, you know, Tesla can talk all it wants about giga storage and whatnot. But the question is, what's the bottom line? You know, what is it really going to do for their cars? How long will a car go without having to recharge itself? You know, the specs have got to be out there. I'm sure they've published them somewhere, and then you can see for yourself, well, is this really a quantum jump or not? My guess is it's not, because look at the stock price. The stock price is telling you all you need to know. I mean, if it really were an amazing jump in battery technology, then presumably the company could also use that technology in other areas outside of the automotive market.
Yeah, good points. Good points. Let's see. Mobileye. Somebody's saying, "Oh, do you want to buy it here?" I don't see anything here. That's what it looks like on the weekly chart. So, you know, if I'm supposed to tell you to buy it, I think it's kind of a dumb question because it's kind of neither here nor there. You know, you're not even getting any pocket pivots coming up through here because nothing exceeds this volume. Maybe this one coming up over the 10-day, but everything's below the 50-day. Now you're trying to get above. I think at best it needs more time to fill out its pattern here and maybe build a new base. So, but you know, this was a name with a lot of. Go ahead, Dr. Go ahead. What?
You know, when they're in a downtrend like this, yeah, you can try playing them. I mean, you could have bought a Mobileye a few days ago and you'd be in the money on it. But the odds are against you because there's too many patterns where you get a buy point of sorts, but then it might roll over within a day. So, you know, maybe you trade it as a swing trade. Maybe you trade it for a day. You know, hope for the best and be quick to take the profits. But to me, that's not the best way to trade because sometimes what also happens is in a downtrend, the very next day, stock can gap down. You know, it's been giving you a warning long enough that something's not right with the company, and then the news finally hits.
Right.
I don't like having my money in something that is gap down prone.
Let's see. Not ready for prime time, that's for sure. Okay, I'm going to cruise through some questions real quick. MYI. BlackRock MiniYield, that's a municipal bond fund, so it's not something I would be shorting. The other thing here is if it were a stock, it trades 131,000 shares a day. That's not something I'd mess with. But I think it's showing you bonds are just getting hammered. I mean, that's already pretty obvious. If you look at the TLT, for example, it looks the same way. So, you know, Dow's up 173, market coming in a little bit. Looks like some of the Nasdaq names are acting a little better. That seems to be rising just a hair. Somebody says, Tesla comes down to one thing. Would you drive an electric Tesla or an electric BMW that has distribution to sell cars and fix cars? End of story. Yeah, that's a good point as well. Who's going to use all these batteries since they don't sell enough cars for the capacity of the factory? That's a good question too. Someone else says, quantum jump in batteries? Probably not in our lifetime. Tesla innovation in batteries is all about reducing cost. But again, who's going to buy them? Everybody else, DJI, Digital Globe, kind of ugly in here. Not really a name I'm interested in. Boston Scientific, I've seen this one trucking higher. Trying to go higher, but you know it's extended, so there's nothing really to do here. If that's a viable gap up, that would be working so far. But notice not a lot of progress. So does it end up like Starbucks, you know, which had a viable gap up here and just kind of backs down and holding along the 20-day? Maybe that's viable there. Dow's up 172. I noticed so Nasdaq moving up 0.51%, so 0.5%. That's a little better than it was when we started this webinar. GBX short. I wouldn't short the BSX or I'm assuming you're talking about GBX as a short. I think it's possibly a short idea. It's a thinner stock. It trades 696,000 shares a day, so that's not what I like to see with respect to the volume. So for me, that's not something I'd be shorting, but I have been noticing this looks, you know, obviously like a big head and shoulders. You get the rally up to the 40-week line here, which coincides with the rally on the daily chart up to the 200-day line, which is a short, and it breaks down pretty sharply. Now you're rallying today into the 50-day, but I think your volume is probably running a little bit better. Let me see here. Minus 8%, so it's a little wedgy. Kind of see how it pans up, but that, you know, that could be shortable using the 50-day line as your stop. But for me, it doesn't trade that much, so it's not thick enough for me. I want them thicker. Can you speak to what factors you use when screening for short candidates? Well, if you read any of our books, and particularly the first book where you talk about short selling, your short sale watch list is just developed from your prior buy watch list. So, you know, stocks that were previously on your buy watch list on the way up, like Tesla, once it starts to break down, it goes on your short watch list. And then I create a short watch list, and then I monitor my short watch list in real time. So I can go and look at it on HGS Investor, and let's say if I go to my short watch list here, user groups, gives me short, here we go, take out the filter here, and I can look at, you know, what are stocks, if I want to do, I can put a filter on here, looking at my short candidates that are up on the day, price up, so we just go price up with minimum volume. And now I can see real quickly that Yelp is minus 56.6, so that's a kind of a wedging rally right there. So, you know, I do this by eyeballing it. So basically, first I create my short watch list. You know, the next one there is Pandora Media, which has kind of been a dog for a while, but not, in that sense, wedging up in the 10-day. That's not really what I'm looking for here. GameStop, there's another one. See how that thing reversed and you're kind of getting a wedging rally this morning? I don't know, that might be a short from here. And so, you know, so that's basically what I'm looking for intraday, and I'm watching things rallying on my short watch list on light volume. So, you know, Curry Green Mountain is rallying on light volume. You can see here. It is minus 47.6%. So you can go, you know, VMware, for example, here's another one. It broke down, and now it's rallying back up into the 50-day, and that might be a short candidate from here. So it looks pretty weak. And that's basically how I do it. So, you know, there's no magic magic screen I use for short selling. I look at stocks that were prior leaders, and that's what I look at and monitor. I build a watch list from broken down prior leaders, and then I monitor it, and I maintain it, and I might take some names off, might add some names. I might even keep a secondary list of longer term breakdowns. You know, VMware is one that comes from that, for example, because it broke down a long time ago, way back in here. So if we go look at a weekly chart here, it broke down way back here. You can see that. So basically, once you see the break off the peak on huge volume, that's when I look at them as shorts. And then I watch the rallies up into the 50-day, 200-day, 20-day, 10-day moving averages and check the volume on an intraday basis. So, you know, everybody wants to think that there are factors, and it's pretty, you know, you have some screen, a magic screen that you use to to search for shorts. So they're right in front of your face if you had a winning stock on your buy list and it's starting to top, like Tesla, like Twitter, like, you know, possibly Facebook more recently, Data, Workday. You know, that's how they show up. So anyways, hopefully that helps. MYL. I don't know. Mylan breaking out. Go for it. Buy it. See if it doesn't fall right back in. I'm not a big fan. Grub's still good. Grub looks okay. I mean, it's come up. The place to buy it was here on this pullback, and you got some nice support off the 20-day, but not huge volume. It's kind of trickling along the 10-day moving average. So my thinking is, it probably needs some time to work on a handle in here. If you see, it's a big cup, so it probably needs some time to build a handle. Not that everything does. I like GoGo, if not for the symbol, you know. And of course, that was one I talked about a couple of weeks ago on one of the webinars in here. And you had the gap up on earnings, and then you have the pullback that holds tight here. I thought it was viable there, and it runs up. Now you're rolling along the 10-day. Volume is pretty light here. So, you know, I don't know. It probably needs some time, but it's trying to come up around the bottom of a base. And what I like about this is I think they're starting to hit their stride, and they're in more and more airliners. And if you look at the service itself, and I had the chance to use it on a flight last year, and it was during market hours, and I was able to run all of my stuff on their internet while in the plane, and I run a lot of stuff. I mean, everything you see here, the eSignal, I run Wanda, I run HCS Investor, all those programs I run were all running very quickly, and everything was blazing along. So it's pretty impressive. So I think they've got the service. I wouldn't be surprised if you saw somebody like Verizon, which they've actually teamed up with in terms of offering. Verizon is offering a free service on airplanes to their customers, I believe. And so there's some partnership going on there, and I think that's constructive for the company. I wouldn't be surprised to see someone like Verizon take them out. Anyways. ACT trying to push into Livermore area. Actavis. Yeah, to me, though, it's not really a hot name. I don't know. Is that going to be, you're going to buy it here and it's going to take off? I don't know. I'm kind of neither here nor there on that one. Let's see. Grub is up 47 cents. Let's go through some of these. The solars have these gap ups. They're kind of down in their patterns here, but sometimes these can be roundabouts. I think pulling into the 200-day moving average, that's where you might want to buy this one. The other one I like in the group is First Solar, which is holding well above its 200-day moving average, but just hanging underneath the 10-day line. There's some talk of them being taken private, which could result in some upside from here. I don't know. Let's see. Jose Cuervo, hanging along the 10-day, probably needs more time. Let's see. Zeltic is trying to come back. It violated the 50-day, and now it's trying to turn back to the upside. And hard to say. This thing, they came out with earnings. They may just need to build a new base in here, so I'd be watching this for a possible pocket pivot coming around. How about this one, you guys? I told you about this one last week on VSLR, right? I think right in just above 1050 last Thursday or Friday. And bingo, this thing's moving a little higher. But I think a lot of the solars are moving higher on the promise of, well, not Solar City, on the promise of solar panels making up more of the electric grid in some areas. And so there's that potential development that could be positive for the group. I don't know. Some of these names are showing some strength. Canadian Solar right along the 10-day line. It's drawing up. Maybe that's a buy right here, for all I know. Let's see. I'm going to wrap this up so I can review my names and get back to trading. CHGG new merchandise. Whoops. Yes, I suppose, but it's a cheap stock, and it trades, what, 282,000 shares? Yeah, that's junky. A good new merchandise name is going to have volume more, in the range of a couple, 3 million shares, so, or at least several hundred thousand if it's a $30 or $40 stock. So this idea of an $8 stock as new merchandise, I think you're on drugs. So LCI just hanging along the 10-day. So go ahead.
Look good on it either. I mean, well, the sales are. There's so many holes in the stock. If this is cheap stock, it's thin. In fact, I'm not sure why the person's interested in this name, because there's a lot of junk out there, and this certainly qualifies.
Yeah, so that's okay. They're probably learning. Would you put HAR in the same category as LinkedIn, Avago? Well, I guess, yeah, it's similar. I mean, would you? What can you see here that's pretty obvious? You tried to break out of this little flag and you broke down, and now it's kind of coming in. And I think that's an issue with a lot of stocks like this. AVGO, Avago, another one. It's tried to come out, but it's not going anywhere. And I think that's symptomatic of this market. What's moving today? Most of the stuff that got hammered over the past few days. So not like we're in this hot to trot market here. Let's see. Well, how does that differ from VSLR? I don't know. CHGG? VSLR is a play on the solar move. So you've got a group phenomenon here, and I just noticed it has a strong pattern. So and in a group, this is consumer services, is CHGG, so I don't really, it's education, so I don't really see what's so exciting about it versus say what this might do if it's acting well in conjunction with what's going on thematically with the solar group. So, if you want to buy a CHGG, then go for it, So ETextbooks for college students, okay, and I'm all over it. Buy it, see what happens. You can use the 10-day line as a stop. So I threw out DSLR kind of as a tongue-in-cheek sort of thing. So, but I thought it was interesting that it moved higher. Anyways, that's all I have. Dr. K, do you have anything exciting to add?
Well, when you're buying a stock in a group, you want to buy the best, and VSLR is certainly not the best. VSLR would be also junk status. It's cool it made that move, but it's a thin name, and there's better stuff. If you're going to play the solars, well, I don't really see anything to play actually right now. But if the group sets up and goes again, there's going to be better stocks to play. So stay away from the junk. Basically, that's the general.
That's the general idea.
Word of advice.
Precisely. Anyways, somebody said VSLR trades closer to 1 million shares. Yeah, that's probably a little better. So. But I just think it's interesting that all the solars are moving all of a sudden, and there is this talk that, and I think there was even a front page article on IBD maybe last week that you're seeing there's only 4% of the electric grid is solar, and so there's a huge opportunity for growth. Now, you could take that information and spin it the other way, that, yes, solar is only 4% of the grid because it's really not that scalable, and it doesn't produce that much reliable energy and blah, 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 and I think that there's a case to be made for that as well. So, 6 of one, half a dozen of the other. So, I don't know. Anyway.
The other thing also is, it trades 1 million shares a day, but take the average daily dollar volume. That's a far more meaningful figure because the stock, remember, is only priced at, what, 11 bucks and change. So the average daily dollar volume right now is it's not even 12 million a day, so that puts it in the thin category. I mean, you really want to be trading stocks that are, at least 20 million a day.
Yeah. Anyways, that's all I've got. Somebody has one last question. I'll let you go off on this one. Any update on your VIX studies?
Oh, on the the XIV. No, it's still work in progress.
Okay.
And it's interesting because I'm glad. I'm giving it time because what the market's been doing, since December with these short, sharp shocks that don't go anywhere, and then the sharp bounces. It is a treacherous market. It's not a normal market, but without that kind of data, the model looks fantastic. Okay, but with that data, it's a problem. And I don't really know. Well, that kind of what we've seen since December to February. I mean, that's the worst kind of market you can see, where it doesn't go anywhere. It just stays in this tight band that you can't really make money off the long or short side when it comes to market timing. So I need to really see. The odds of that kind of pattern emerging are very, very low. But nevertheless, it did happen, and maybe it's going to happen again. Perhaps once QE changes its direction, or maybe the Fed starts to really let go of it, then I have a lot more confidence in the XIV because you will probably not see these kinds of QE-motivated patterns. I mean, you'd be hard-pressed to go back in time to see, a very tight pattern like we've seen that is pretty much the doomsday of market timing models. But fortunately, they're rare, and we have to keep in mind that a lot of these patterns that we're seeing traced out are motivated by QE, thus manipulated. So at any rate, the XIV model, it's still on the workbench, and I want us to see more data come out because ultimately I do believe the model can more than make up for these kinds of bad periods between December and February, as long as we don't, if that kind of period occurs once a year and only for a month, is the model going to be able to make up for that bad period? And the answer should be yes.
All right, good enough. That's all we got, everyone. No, I did not get the chess article you sent, Gar, so if you can resend it to info@mochainvestors.com, and I should be able to get it. Yeah, that reminds me, the Reykjavik, in Reykjavik, Iceland, the Reykjavik Chess Open is actually about to start, and I like to watch this sort of stuff online, so it keeps me from getting my head too far into the market. I got a couple of shorts out, see how they play out. But, you know, we'll just see how this goes. So that part of the short side was here. So, and the names to be playing, you know, you had Workday was a lovely short, and no, not Workday. Let's see, Workday. Here we go. Hello. One more time. Yeah, there we go. So, here we go. And you notice how it's reversed and it's turned red. So maybe we'll see a bunch of others start to do the same thing. Anyways, you guys, thanks for showing up. We'll catch you next time. Take care.
So long, everyone.